All right, everyone, here we are with ticker symbol HTZ, Hertz Global Holdings Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So Hertz has actually broken through the 50-day moving average, broke through support, and started to hit newer lows. I had stated that if it broke through that 182 mark, which is actually creating a support there, it's hanging in there, this would start to see newer lows. So we're about to break through that or recover from that. So tomorrow is a very important day to pay close attention to, because if that 182 mark does get broken through, then the next support here, which is the lowest point reached in the day, was 168, and it would start to reach newer lows on the date of the 16th before this bullish run continued. So these are some very important numbers, and 182 is certainly right now holding this up and stopping it from hitting lower lows. So we're going to move our support to the lowest point reached in this bearish run, and we're going to move our resistance to the highest point before it fell, leveling off, and it got a rejection there twice and started to hit newer lows. I mean, we do have this point here in the last couple of hours, 193. You can write that down. That gives you a sense of direction of where this is going, but that does not signify that the bulls have gained control, because it's way too close, way too narrow, and still below in bearish territory. So this resistance level is very important. And again, this support that we're about to look at is important, but the support that we've been talking about for the recent days is 182. We're currently on it, and it's hanging in there. It's not falling. So if it falls from that, it's going to be very important to pay close attention to this resistance level and support that we're about to talk about in just a second. So 50-day moving average is 229. If that gets crossed in an upward direction, the bulls have gained control. We're back in bullish territory. And if we stay below it, we're in bearish territory. So we're going to look at here our support level. It's currently on 182, and the support level is 179. So if this breaks through 182, like I've been saying, it will start to see newer lows. And then the next support level, which is the lowest point reached in the day, and then leveling off where we're at now, is 179, 3-cent difference. So if 179 gets broken through, this could start to see newer lows, newer support levels, and move further away from the support, and also starting to hit newer lows, right? Moving away from the support and hitting newer lows, and pull away from the 50-day moving average in a downward direction. So super important. I want to emphasize to all investors, pay very close attention to 179 and how quickly this is hitting newer lows, or are the bulls even trying to reappear and bring this one back up. Now, on the other hand, we have what the bulls want, and that is breaking through this resistance. First, they have to break through the 50-day moving average of 229, and 229 needs to be turned into a support so they can break away from it and hit newer highs. Now, if they're able to break through the 50-day moving average and turn it into a support, their next step is breaking through the resistance of 238. 238 needs to be turned into a support so that they can go ahead and signify that they've gained control. It can also signify that they have gained possession and they're going to pull further away from the 50-day moving average. Super important, 238, for the bulls to break through and turn into a support. If they accomplish that, they accomplish two things. They broke through the first resistance level that is turned into a support to pull this away from the 50-day moving average, and they broke through the 50-day moving average, getting back into bullish territory. So it's super important for the bulls to break through 238 and reach newer highs and newer resistance levels, pulling away from the 50-day moving average in an upward direction. Now, again, super important to emphasize this to all investors and viewers. 179 is the support. If it gets broken through, put your 1 minute, your 5 minute, your 15-minute charts and pay close attention to how this stock is reacting and how it's behaving and how quickly is it hitting newer lows, and are the bulls even trying to reappear. As always, if you found this video helpful and informative, please do so and subscribe. Share this with your friends and community, and don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Hit the like button to let me know you watched this video. And thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points And by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.